If you have a six-figure crypto portfolio, this might be the most important video you watch all cycle. Because right now, Bitcoin is approaching the same structural point that gave investors one final exit before the major drawdowns in previous cycles. And if you held through the October top, if you watch your profits evaporate once already, you're about to get one more clean opportunity to avoid repeating the same mistake again. I'm going to show you exactly where that level is, why it matters, and what the next few months likely hold for Bitcoin. There are only two scenarios left, and both of them converge on the same decision point for serious investors who want to protect their wealth. This isn't fear, this is structure. And if you ignore this level, you risk round tripping your entire portfolio again. Let's get into it. So at this point, we are with a very high likelihood in a bear market. We have multiple weekly closes below the 50-week moving average, this yellow line here, which historically has always been the start of the bear market, as you can see here and in previous cycles. And multiple closes below this green parallel channel, which has been respected for the entirety of this bull market. Then also, of course, weekly closes below the 100K level, which is a big psychological level. On the economical side, liquidity is shifting. We just had the FOMC, and the Federal Reserve was relatively hawkish for 2026. But more importantly, what are global central banks doing? Not just the dollar, not just the US. And in this Financial Times article, you can see that this in red is the Federal Reserve, so the United States, the US dollar. And we have the Bank of Canada, the European Central Bank, Australian. And we can see a trend of stopping the easing cycle. So for the last 2 years, 1 to 2 years, central banks around the world were easing their interest rates. They were lowering their interest rates. They were cutting. And we are now at a point where they might even hike. So they might raise interest rates. So global central banks around the world might be ready and start, or even have to, raise interest rates in 2026. That would mean that, of course, global liquidity goes down, and that hurts risk assets. At the same time, if the Federal Reserve keeps cutting rates, the dollar could weaken with that, of course. That doesn't mean, though, that a weak dollar is good for risk assets, because you always have to go into why the dollar is weak, right? You can't just blindly follow this chart. So my expectation is still we could likely flip this level at 100, the 100 mark, and then go up to 105, 110, and 115, and so on. And we then top out at the range highs here of this parallel channel. But of course, a weakening dollar could still be in play as they cut rates, keep cutting rates, even though not a lot, maybe 100 basis points, 50 basis points, maybe even, just right. According to expectations, there's not much expected for the next few months, not at all actually, when it comes to the Federal Reserve. And as you can see, global central banks might even raise rates. These are expectations. We don't know what's going to happen, but according to expectations, this is what's going to happen. And smart money will follow that. And they knew that months ago. They knew this when I started shorting. That was also a reason why I shorted at 120,000. That is also the reason why I sold up here. I exited the crypto market fully up here because the risk reward was just not good enough. I expected a drop down. I still expect much lower prices than 90,000 or 80,000, at least this local bottom that we formed here, from this local bottom that we formed here. But for you, if you didn't sell, if you didn't sell up here, if you, let's say, bought down here or down here, up here or here, and you didn't sell up here, and you might be break even right now or still in profit, this is my warning to you. We are likely going down to this 200-week moving average, this white line. It might even fall below it. In previous cycles, we have never fallen. We usually didn't fall below it, but in the last cycle, well, in the last bear market, we fell below it, another 30% below it. So what does that mean for you? Let's say we go down to that, Bitcoin goes down to that 200-week moving average, which is very likely going to happen, by the way. It has always happened so far. And from here, another 30%, that would mean 38,000, around 39,000. Maybe when we do get there, when Bitcoin does get there, that might be already 40,000. But my expectation is that Bitcoin is very likely going down to 60,000, even 50,000, just around the 200-week moving average. And remember, I don't play those price target games where I give a very clear price target in the very long term. So I play level to level, and my first level will be 60,000 and the 200-week moving average. When we get there, the bottom might not be in. I will check then. For example, I remember back in 2021 when the bear market started here, falling below the 50-week moving average. And then going into 2022, we fell here to the 200-week moving average, and most actually didn't call for the bottom, but at least many that I know that are good traders as I am and good investors as I am, without being arrogant, by the way, don't take that the wrong way. They said, okay, the bottom is in. But I was a bit skeptical. Yeah, we had a RSI reset here. We fell below the 30 level. We were completely oversold. But what I wanted to see is a more confirmation, and we got it. We had lower prices actually. A few months later, we had a weekly bullish divergence where I went all in back again, as you can see here. Very nice. We had a lower low in the price and a higher low in the indicator, in the RSI. And that was a big confirmation. So it went down from 80,000 down to 15,000, around 15,000. So another 3K. Of course, you don't have to completely maximize your profits either. That's one advice that I always give. You're not here to fully maximize your profits, because then you'll always either miss the top or miss the bottom. Because many were telling me, okay, I'm going to sell at 130, but the top signal was already at 125. It was already at 120. Not before, but at 120. That's why I shorted there, right? But we had a double confirmation at 125, 126. So even more confluence. So you will likely miss the exact top or the exact bottom, but you will get very close to it with my system, with what I'm telling you here. So what can you do? If you didn't sell up here, what can you do? What is the last opportunity that you get to sell at reasonable prices, at least? So after this FOMC, this scenario is a bit more unlikely, but it's still likely to happen, in my opinion, just from a technical point of view. So what I'm talking about is a retest of the 102,000 area and 107,000 area. So something in between there. Why? Well, that would be the 50-week moving average. 102,000 is the 50-week moving average as of right now. And in previous cycles, we always had that retest. We fell below it, bearish retest of the 50-week moving average, and then lower lows. Same here. Fell below it, bearish retest, lower lows. And at this point, the 50-week moving average is at $102,200. So that would be a pretty clean retest. And I expect it actually to possibly go even up to 107,000. So maybe we hit the green parallel channel here. So we have something like this, and then we go down to lower prices, to lower lows. It doesn't have to happen. If we get it, for me, it's a blessing because I'll add to my shorts. I'll increase my short position at that point. I of course can exit more of my positions since I exited at the top. But for you, if you didn't sell, because I have many people that come to me, Diego, I didn't sell at 120,000, 125,000 when you told me to sell, when you talked about it. I saw the signals, I saw everything, but somehow I wasn't ready to sell. I thought, because most people told most YouTubers and analysts told everyone, oh, we're going to 130 to 140 to 180,000, which was a complete lie, made up lie, maybe by smart money so they can sell on you on retail. We don't know. This is of course speculation, but the charts were clear. The top was in October, and it was very clear. It was pretty easy to figure out actually. But usually what is in your way are emotions. That is why I don't stick to those price targets, because I have a lot of people that come to me, lots of new clients now that come to me saying, well, the reason why they didn't sell up here were, well, I always had in mind 140,000, 180,000 even. Well, that doesn't matter. You shouldn't fixate so much on a price point, really. It's good to have price targets, but still consider the signals you get level to level, because things can change. If you think we go up to 180,000, that's your target starting from down here, you're going to ignore all the local tops and bottoms, and you're also going to ignore the absolute top, which probably happened, right? Because you always stick to, okay, I'm going to sell at 140. But what is 140 really? That's just another, what? 12%? Is that risk really worth it for the reward you get? And at this point, we already had dozens of signals telling you, this is the top, please sell. But most didn't. But for you, if you didn't sell, if you got caught up, maybe you forgot. I'm not shaming you, by the way. I'm trying to explain this in a good manner so that you can learn. I have many videos. And by the way, if you do need help with this, if you need help with your portfolio, your strategy, your system, I have a strategy diagnosis call. You can check the first link below in the description, and you can get help there from me directly. So I have many videos explaining how to time the top and bottom. It's very simple actually. And here I will help you find a exit point, at least, because I don't think we will go higher. We could go higher, of course. Trading is a game of probabilities, but I don't think we will go higher from here, meaning higher new all-time highs, at least in the next 8 months. In the next 12 months, really. I don't expect new all-time highs. Of course, I could be wrong, and things can change, of course. And then if the facts change, I'll also change my opinion, of course. But for now, it looks very bad, and I expect 60, 50,000 at least. So what can you do? So I see two scenarios for this to unfold. So a retest of the 102, 107,000 area. That would be a blessing for you if you didn't sell. And that could be around, in a few weeks, maybe even a few days. You never really know, but let me show you what I expect. So if we look here at the RSI and the price, we're here on the 3-day chart, by the way. So between the 1 day and 3 day, this is what I'm looking at. So on the daily, we could see something like this, right? A lower low in the price, a lower low in the price, so we fall, at least below $84,500, and then a move higher, and here a lower high on the RSI. That would be a bullish divergence. And then the retest of 102,000 up to 107,000. Or we see just a break above the 94K level. The 94K level is a big level since it is right around the yearly open. So that is why we have rejected from there many times now. Pretty much 1, 2, 3, 4 times. You could say here too. Many times before. And why we're having, this is why Bitcoin has a hard time going above it. Or we see just, a flip of that 94K area and then a move higher and then the move down before lower lows. I think that's more unlikely, but that could of course happen. And of course, this could all happen on the 3-day time frame too. So from the 1 day to the 3 day. On the 3 day, this would have to happen below 86,500, if I'm not mistaken, exactly. And the RSI we got here, and we would have here a lower low and then a jump up due to the bullish divergence we have, a jump up here. So a lower high and a lower low. And that could likely happen. I think that will happen. That is more than likely to happen. It has happened in previous cycles too. I'm pretty sure it will happen. It's not guaranteed, of course, but I'm pretty sure it will happen. And it's common for Bitcoin to repeat that pattern, to retest at least the 50-week moving average, as it was a huge support and is always a huge support during the bull cycle, the bull market. So what does it mean for you if let's say we get to 102,000, even 107,000, and you don't sell again? You get caught up again because people when we do get up there, a lot of accounts on X and YouTube, channels on YouTube, of course, will tell you, oh my gosh, the bull market has started again. The bears are wrong. We are right. But structurally, nothing happened. As long as we don't flip that area and see multiple weekly closes above it, I'm sticking to my opinion that the bear market is in. So don't get caught up. And when you do get there, I personally would take profits, exit the market, or else it will cost you hundreds of thousands, because I do expect a dip lower. I expect lower prices down to 60,000, 50,000. That would mean another drop of at least 39,000. What does that mean to your portfolio? We could go even as low as 30,000. That would go in line with previous cycles. Doesn't have to happen, but that could happen, right? What would that mean for you? That would be pretty bad for your portfolio, I guess. I mean, it's 66%. So what's the cost? Do you just want to hodl through and go with that diamond hands? I don't advise that usually. My clients don't do that. My clients and I, of course, we buy the bottoms, we sell, take profits at those local tops, buy again down here, do the same here, and then fully exit at the tops, at the cycle tops. So we play on the macro and also during those micro, like those mini moves up, right? Like, so up here, you wouldn't sell everything, of course, or up here, because you know the top is not fully in, but it is a local top that has been formed. And again, back then, it was also pretty clear, and I called it publicly. So what you can do now is, of course, you could sell everything right now. It's pretty hard to make that decision, as we are at crossroads. But if you are lucky, if we get that nice retest of the 50-week moving average at 102,000, and maybe even if the green parallel channel at around 107,000 at that point when we get the retest, that would be a blessing, and you would be able to sell or take profits at least, so that you can buy more Bitcoin when we get to the bottom, which, by the way, I expect in September, October of next year. So 2026, exactly a year after the top was in. This has always been the bottom so far. Doesn't have to repeat, but usually it repeats because the market is in a self-fulfilling prophecy. So when retail stops believing that self-fulfilling prophecy, at that 4-year cycle idea, that's when it happens again. That's when they get caught up again. And again, few weeks before the October crash, retail was saying, yeah, the 4-year cycle is over. They're still saying it, and so far the 4-year cycle is on the day, perfectly on the day. So it worked perfectly again. And yeah, that is it for today. So again, if you need help with this, with your strategy, if you want my strategy, if you need help with your portfolio, with crypto in general, there is a link below where you can find out more. And may God bless you.